Hello, I'm Debbie Bell-Hosking for FinextraTV at EBAday 2025 in Paris. And I'm joined by Daniel Hurst of FIS Global. And we're talking about understanding payments as a service and its impact on financial institutions. Daniel, welcome to our EBAday pop-up studio.
Thank you very much, Debbie. Thank you. It was wonderful to join you and a fantastic topic to talk about as well.
Well, it is. And let's start off by looking at cloud technology. And what role do you see that having in payments transformation?
Okay, how is cloud affecting payments transformation? My own personal experience of this, it's the number one change agent in the market we're seeing today. And I actually see that in the evidence of what I see in our own clients' behavior, our own projects. I think over the last 18 months to 2 years now, every single new project we've taken on at FIS in enterprise payments has been a cloud-focused project. Every RFP that turns up, cloud is right in the middle of it. So definitely the market has, the change agent within the market for transformation has definitely got cloud in the center of that. And I really do understand why as well, because we, as practitioners in the industry, we run our own payments as a service for clients, PaaS, effectively. So we're responsible for running these systems on behalf of these large banks. And if I think about what keeps me up at night.
Good question.
Well, it's definitely the availability of our services. You know, are they running? Are they performant? Can they scale to meet client demand? Are they secure? Because if any of those sort of tenets are broken, I've got really upset customers on my hands, very high escalations. And then when you look at the cloud technologies that underpin the services we provide today, and I think it's very important to differentiate between how an application is designed for the cloud as opposed to this concept of the cloud is just outsourcing. So the true cloud native design of technology that it affords us now provides very elegant questions to the things keeping me up at night. So ideally these payment services are cloud native in the fact they're always on. So they're designed across multi-availability zones, multi-containers. If you get a problem over here, it just elegantly moves to processing over here. It allows you to update them on the fly, so you don't have to consider downtime. You can elastically scale your resources to cope with peak volumes, or ideally then diminish the resources when the volumes aren't as high. And because we tend to be working with the large global public cloud vendors, they spend oodles of money and efforts on security, so you can sort of rest assured that the security design of these solutions is top-notch. So very elegant solutions for the key challenges that an operator would really worry about and what executives would worry about. So I think payments and cloud, it's really like a hand going into a glove. They are perfect partners within the transformation journey.
So based on all this experience and hopefully getting lots of sleep and not staying up at night worrying, what would you suggest are the key factors that financial institutions should consider when thinking about a third-party PaaS provider?
That's a very good question, yes. There's a multitude, there's several components to that, I would say. First one, in the practical sense, is for the institution to really look at its true requirements for its payment hub technology. Not just now, because right now there's a number of drivers, you meet regulation, but what does that look like in 3 to 5 years' time? And because payments as a service technologies come in multiple guises, you can have pretty simple gateway solutions, which are really just addressing the network side into the CSMs, or you can have fully fledged payment hub technology that maps the messages in the first place, then does all the orchestration, and sends it out for a fraud check, handles that, sends it out to handle the foreign exchange, sends it out for pricing or customer agreements, does the accounting. So the does the stand-in and protects your back office system. So, what is the real requirement? And I think financial institutions really need to think about that now and for the future. And then building upon that, you begin to see other facets that come into the considerations. So we talk about cloud right from the start. And that's a technology decision. So, when banks and the financial institutions are going to outsource their capability, what sort of technology platform are they coming into? Is it modern? Is it bringing those benefits that we talked about to them? And can they access it through APIs and build their own services in a self-contained manner? So it actually becomes an enabler of their own growth. And then on top of that, it's also clearly does the particular supplier have the credentials to be a long-term provider? Is the cost structure right? Does the business case stand up? And finally, do they have the controls? Do they have the SOC reports, so system operational control reports? Do they have the certificates to say that they're a strong partner within that marketplace? So I think there's a multitude of considerations, and when an institution actually addresses that, sees the strategic benefit of outsourcing and sees it can be done, I think it becomes a very valid option for a number of institutions in the marketplace.
Okay. And there's a word you mentioned previously, which was scalability.
Yes. Okay.
So how important would you say scalability is for when choosing a provider, but also in terms of your PaaS solution?
Yeah, absolutely. When I think about scalability can be two ways. It can be, for me, and I'll talk about the very obvious one, which is volume. That's one element. How much volume can this thing cope with? And then the other scalability is horizontal scalability. How do you get into a new capability functionally, and how do you widen the brief? But let's look at the real piece, which I think is the volume case. So with a payments as a service solution, you can service different tiers of the marketplace, be it large global tier one banks, be it smaller institutions, be it financial technology firms. I would say the tier one banks have always volume as a real concern. And if you look at Instant now, typically the payment hubs are engineered to do 50 to 100 TPS in real time, where you've also got to really care about the latency of the transaction as well. We're now seeing global shifts of batch transactions moving into Instant. You're beginning to see the business overlay services of request to pay and account to account adding to the volume. So it's no longer a 50 TPS, 100 TPS issue. It's now coming 200 TPS, 500 in the thousands, and we predict this. So the tier ones are going to need this. So of course the solutions that we have need to embrace that and be able to scale in that way. So that's a real criteria for those large banks. I think then the fintechs or those banks where payments is an absolute fundamental part of their business, they also have very significant considerations about scale, because payments is the heart of what they do. So there they've got to be ultra convinced that your services can scale and you're looking after them for the long term. I think probably the tier 3s to tier 6 banks, they're probably a little more stable. They're still affected by the macro changes going on within the industry, but I think definitely the tier 1s and those payment fintechs, that volume discussion is there and is a very important part of the puzzle. Yeah.
So we're talking there about scalability, but
yes.
Is there a gear shift? Is there a key cultural shift that financial institutions need to go through in order to make the most of these cloud-based PaaS solutions?
Yeah, I think so. Yeah. It's I think with any this is transformational change that's occurring, and you go back 10 years or 20 years, actually externalizing services for an institution would be a very difficult concept. So now we're actually talking about trust in a third-party provider to actually handle all your payments on your behalf, right? That's a big, I think that's a big cultural change. And like with any cultural change, it's almost, I think you've got to hold hands together and one step at a time try to get yourself across that bridge to the other side. And we find we're having to do this in many conversations with institutions to help them through. They would like to do it because of all the benefits of being able to achieve such a model, but it's definitely a stepped process. And I think with any step process, there's always objections. And so part of it is in trying to get a common view of we can walk across this bridge together, is how do we address the objections? And these, and we see some very clear ones that always come up, and we've always got solutions for them. And these would be typically, well, we can't see how possibly with an outsourced proposition, how we could get a tailored enough solution for our customized requirements. It's just going to be way too standardized. We're not going to be able to adapt. Well, after a lot of discussion and some time, we can prove that there are ways of actually addressing that. Or then there would be the types of things come up. Oh, we've got an IT policy that says we don't outsource, or we have to get approvals from our regulators, so we don't have to approach that topic. Or we're really concerned about our data being out there in the cloud, and how do we protect our customers' data? All of those items, I think, are now well trodden. We've got great answers to. But then one actually tripped. One was a lot more difficult recently, actually, and I'll share this one.
Yes.
I'll share this one. This was actually related to the geopolitical climate more than anything else, and not so much now a case of how secure is the data, but how can we prevent prying eyes or external forces cutting off our capabilities, let's put it that way. And it resonates, this one. So if you think, let's say the world is in a strange place for a variety of reasons geopolitically. And ultimately we've had a few institutions who have been uncomfortable with the fact of how do we, when we put our data in the cloud, how can we protect ourselves in these sort of situations? And we had one institution ask us, every single transaction that you process, can you delete it and purge it and just send us the record down to our... And that's not a practical, scalable solution because you have to have a certain amount of data within your operational in order to handle the reversals and provide a very good service to other banks. But these are some of those now other concerns that come into the mix. And I think it's very important there for a bank to then consider its own risk profile, its own position in the global marketplace, and decide, what is a solution that best suits them as they move forward. So I think that cultural change, it's not only putting answers to the technical issues and the can-do attitude and walking over that bridge together, but there seems to be some significant geopolitical items that need to come into consideration as well. And there's not. I'd love to have answers to everything, but that's a difficult one for me to answer.
Well, Daniel, you might not have the answers to everything, but you've certainly given us a great overview, and my mind is turning, really. I quite enjoyed right at the start where you spoke about how years ago you wouldn't even consider having an external partner, and now we've had this huge shift where not only are people genuinely actively using cloud, but there's still these other fraud-related things that we need to consider as well. So it's an ongoing journey. And we're all learning together, and we're all. But I think the whole industry is evolving for the better. And this show you do together with EBAday is amazing. And today it's fantastic. It's one of the most elegant venues. We're at the Louvre, the home of the Mona Lisa, and it's such a fantastic environment for collaboration and discussing these points. So, no, thank you, Daniel. And of course, we can see it out the window, so more to come.
Yeah,
thank you so much.
Not at all. Thank you.